Hi, I'm Victor, and I wanted to provide a bond report on May 11th, 2022. So, bonds have been moving quite a bit because interest rates have been going up very fast in 2022. You probably noticed that over the last 2 months, interest rates have just been going up. The stock market's been going down very quickly. And as interest rates go up, bond prices go down. But the good news is yields go up, meaning that if you buy a bond today, you'll make more interest than you would have made, let's say, 6 months ago. Considerably more, not a little bit more, considerably more. And the volatility has led me to really begin to research and invest in bonds in 2022. And I found some really interesting investments that I'm going to share with you. As I move forward, let me show you the stock market. So I showed you how rates were going up on the 5-year, the 10-year, and the 30-year. Here's the NASDAQ, the Dow, and the S&P. And for year to date, it's not a pretty picture. The S&P is down 18% year to date. The NASDAQ's down 28%. So stocks have just been beat up, quite a bit. And there's no story out there that I've heard that's going to change 2022. I think people are pretty resigned to the fact that 2022 is going to be a down year for equities. And I believe it's a great time to buy certain stocks and companies that I believe in. And I continue to buy more shares. And I have a plan there. It's a long-term plan. And I am executing that plan. In addition to that, I have a plan to buy more bonds. And the reason for it is the yields combined with the overall appreciation of your capital is there in a bond for a nice total return in a bond. Let me show you a few good examples. So here are some bonds that I'm an investor in. And these are predominantly corporate bonds. There's one municipal bond, and then there's one mutual fund. And then there's two that are directly issued out by the Treasury Department. I'm going to work from the bottom up. First, I bonds. If you haven't done so already, take a look at I bonds. This is probably the easiest decision I've made in 2022, which is maximizing the amount I'm allowed to buy from the Treasury for myself and my wife in I bonds. It's inflation protected, so it pays 9.62% yield, which is a phenomenal yield. And that one's kind of a no-brainer in my mind. So that's one you ought to take a look at. I also bought a short-term, I would say a medium-term, I guess, a 3-year Treasury note directly from the Treasury, and it pays 2.74%. Both of these are considered risk-free. So that's a nice starting point. I also have a nice short-term bond fund. And this really is a collection of bonds that are going to mature in the next 2 years. It's a very little return, but it also doesn't expose you to a long-term maturity schedule, which could have a lot of ups and downs. So this is probably my biggest holding is in this short-term bond fund to make some yield during these really tough times during the stock market. But now we're going to hit some pay dirt of some really interesting investments. And again, this is an example of what I'm doing. I'm not recommending this for anybody. Everybody's situation is different. In my case, I'm a little bit of a risk taker, and I really like going after a really good return. So let me show you some examples of things that I found. First, the University of California has a bond out there, municipal bond. You don't have to pay state or local taxes on it, but you do have to pay federal tax on it. And it really, my return on it's going to be 7.21%. It has about a 10-year maturity schedule. But I really like that return. I'm very familiar with the University of California. I'm a product, graduated from 2 of their schools, one for my bachelor's in accounting and the other one for an MBA. So thank you, State of California. And I have a son that's going to be attending one of their schools in the fall. So very familiar with these guys and very comfortable with them, and very good rating on it. So I'm very comfortable with this investment. Another one that I'm comfortable with is Summit Midstream is a very high return bond, but it's in that junk bond category. It does transportation of oil and those types of natural products. I'm very familiar with the oil business. I worked at an oil company and have owned stock in midstream companies. You could say they're risky. I don't view them that way. I think they're small, but if you pick the right small companies, you can do quite well. And I don't have a lot of money in there, but I do have a position with this bond, and it's going to have a return of 20%. Spirit Aerospace Systems, very familiar with that company. It's a junk bond rating, but I'm very familiar with this company. They have contracts with Boeing, the federal government. The travel industry is really taken off, and these guys make a lot of the structures for airplanes for Boeing and the military. And so their demand is just through the roof. They're doing really good as a business. So I both own the Spirit stock and I own their bonds because I got their bonds at a significant discount. Again, as interest rates go up, bond prices go down. So I got their bonds discounted, and collectively, I'm going to make about 12.6% on that bond. Next one, again, oil company. This is the petroleum company down in Mexico. Mexico, their number one export market is the United States. We use a lot of their oil. And obviously right now, oil prices are really high. Pemex is doing really well. You can't buy stock in that company, but you can buy their corporate bonds. And the return I'm expecting there is 11.2%. Next is a food company, Monsanto. They do a lot of the agriculture products, that farmers would buy. Monsanto provides seeds, fertilizers, all kinds of things that farmers would need to plant their crops. This is a corporate bond, has a return of 6.44% for me, and has a long-term duration. And I'm using a term here, return. If you watch some of my bond videos, you'll know what that means, because there's a yield component of what you're making on the bond. But if you buy a bond at a discount, every year you're working towards that maturity date. On maturity date, you get the full redemption of that bond. So when you add the two pieces together, that's what I get as a return. Macy's, the next company. I've been a Macy's stockholder for 10 years. Very familiar with that company. And I understand what cycle they're in right now. Retail is doing really well. I think it's kind of avoiding the radar because there's just so much carnage out there right now. You have the likes of, I think Coinbase just got slammed today. So it's taken a lot of the attention away from retail, but retail is doing really well. I heard a REIT that I own, Macerich, they do retail space, and they had a very good report on how retail is doing. So collectively, listening to Macy's earnings call and looking at the economy, I believe that retail is doing well. Macy's is one of those leaders, and they have a bond that will give me a return of 7.46%. Goodyear, I did a video on this just not too long ago. My return is going to be 9.79%. I think we all know who Goodyear Tires is. Lumen, I've been a stockholder for some time. Communications company. So everybody needs their internet, and these guys, that's what they do. They do communications, and I can make a return of 11% with that company. And then here's the cruise ship company, Carnival. And everybody's like just dying to go on vacation. Carnival, they've had record reservations and bookings for cruises. So I think they're going to rebound quite well. And I've got a short-term bond with Carnival that pays 6.87%. And lastly is a logistics company. And logistics is just, they're making money hand over fist. My best stock today was Panel, PANL. They were up 9.65%. They're ocean logistics. These guys are more road logistics. And these guys have a bond that I'm going to return 6.65%. So these are some ideas. What I'm trying to do is I'm trying to, make a good return. And most of my holdings are in stocks other than real estate. Real estate, I have investment properties that I own and rent long-term, but then my stock portfolio really has a lot there. And I'm trying to diversify away from those stocks into some bonds where I can have a very good stream of cash flow and I could really get a good return, especially with interest rates having gone up. It really begins to make bonds attractive in my eye. So please keep in mind that I made this video for entertainment purposes only. I'm not a professional advisor. I hope you found this interesting, but it's really just me sharing my experience as an investor in bonds. And I hope you found it interesting. Well, thank you for watching. And I wanted to make this video. I had some good comments on my videos of sharing, if I would share some ideas of where I'm investing in bonds. I hope you found it interesting and helpful. And I hope, I wish you good luck in investing in 2022.